All right. Hey there, everybody. Good morning, good afternoon, good evening, depending on where you guys are at. I hope you're having a good trading day today so far. As always, we'll start with SPX. Hey, Lorna, Mirza, great to see y'all. 007, always good to see you. Hope you're having a good trading day today. We will get started here, of course, on SPX. And then if you guys have any other questions, whether it's around an individual symbol, a strategy, an indicator, maybe a trade that you're in, I am happy to go over that. Frank, I see that. TTD, absolutely. We'll add that to the list here. But let's start with SPX first. Hey, Grace and Tesla, certainly. Add that to the list too. We'll definitely be able to get to both of those today. But for the overall market right now, so let's start from the intraday charts and then we'll go from there. We had a really great run to the upside yesterday. It was a nice just stair step higher. I see INTC. I'll add that too. Um, so a beautiful run to the upside. And then we got towards 43.80-ish. And that at least short term, like from the past week or so, has kind of been an intraday price resistance level. You can see that we stalled around that range back here on the 21st, again on the 23rd, and then of course yesterday. And so that is kind of the hurdle that we're fighting right now today. We had a bit of a gap down this morning, but we only gapped down right into intraday support levels on the hourly chart. It was right down into the 10 and the 30, which did a good job of holding. On the 5-minute chart, it was down into the 100 period simple. Notice even on the 10-minute chart that we had broken at the time the two moving averages, the Bollinger Bands, they weren't strongly flaring open to the downside and they ended up starting to flatten out rather quickly. So all of that was a clue that this level was attempting to hold and we could bounce back up. So if you did catch this, if maybe you had the bullish divergent bar as one of the indicators that you like to use, then you may have noticed that it made a nice bullish divergent bar here with the first hourly bar. If you had jumped into that, then it certainly would have allowed for, at the very least, a quick scalp or profit recycle trade to play up into this 43.80 level. Currently, right, we see the struggle there on the 10-minute chart. We have the ATR trailing stop trading slightly above us. Bollinger Bands on the smaller time frames are still a little flat, which would make me cautious. But overall, what I like about the hourly chart setup is the trend is attempting to turn bullish again. So the 10 period simple basically came down towards the 100, rolled off of that level, and is crossing back above the 30 to make this a stacked up bullish formation. We have the momentum crossing above the 0 line, which is bullish. And as we zoom out, you can see it has plenty of room to move higher to the top of the axis if it chooses to. We have the hourly squeeze that is attempting to fire to the upside, or I don't know, arguably, right? It looked like it was starting to fire to the downside, but then yesterday it reprinted that squeeze and now it's attempting to move higher. And then we have our Bollinger Band still pointed up on the hourly chart. So, bigger picture from an intraday perspective, that is, there's still that anticipation that we could move higher. If we are able to really break above this 43.80, 43.84 level, then the next bigger target I'd be playing into is 4,400. Now, as a reminder about playing into big psychological levels like that, sometimes we'll get close to them, barely tag them, stall, and then still might end up pulling back. So keep that in mind. The closer we get to 4,400, if it looks like it's stalling, if it looks like there's a little bit of weakness on the intraday timeframes, maybe on momentum or something, then that could be a clue to, go ahead and lock in profits from an intraday perspective and, take that profit off the table. If we go up to 4,400 and everything still looks solid to break through it, then of course we could continue to move higher because our recent highs are above that level, right? Let's zoom in here to the daily chart. Over here, the highs that we could be ultimately working our way back up into is right around 44.50, right? That's the little bit bigger picture point of view from the daily chart here. Now, for those of you who might have been over in the strike zone mastery or the futures room, I did hop on for a little impromptu quick session with Joe. It wasn't at our normal time that we usually do things. I do apologize about that. I had meetings that I was in this morning, but we can see we were talking and I mentioned in there that basically I would not be too surprised if we just kind of chopped in this range, and maybe we could see that into the end of the week. Hey, Jane, good to see you. And Lynn, Uber, absolutely. I'll add that to the list. Um, and the reason why I think that's a possibility is because from a daily chart perspective, we got very close to exhaustion, or we were at exhaustion across multiple indexes, right? We definitely are on NDX. We got very close on SPX to exhaustion levels. Certainly, we were at prior exhaustion levels that we had seen pullbacks in the past from. And so when you reach that exhaustion and the momentum starts to pull back, it's a good clue that the price will either, in this case, because it's bullish exhaustion, it will either pull back with the price and move lower, or it consolidates, right? And that's the case across the board off any exhaustion, bullish or bearish. Consolidation is always a possibility. You don't need necessarily a strong directional move in order for that momentum to reset. And so that's kind of what we are seeing here, right? Momentum is in the process of pulling back towards the zero line, and the price did pull back a little bit, but for the most part, it's still consolidating. We certainly aren't breaking anything about this bullish trend here. Our pullback signal on the compound breakout tool is already canceled out. And so it looks like we're just kind of hanging out around the 10 period simple. And so overall, what I would take away from this, at least as of right now, is that still leans towards overall bullish strength, right? The fact that we're not completely giving up this nice run to the upside that we had in late May going into June, the fact that it's just stalling here while momentum's reset is usually a better sign for bulls that once the momentum starts to pick back up, we'll attempt to go into the next leg to the upside. And if we are consolidating, and we kind of identified quote unquote the bottom of this choppy range here, then we have room to move back up to test the recent highs and still be in that chop. Notice the Bollinger Bands, for example, they started to come together back here around the 22nd towards the 26th, but then they flattened out right at the 4450 level. And so the fact that they're flattening out there means that they're okay, right, with the price going up and testing this range and basically still being within its comfort zone. For those of you who don't know, Bollinger Bands are one of the very first indicators I ever had on my charts. I think they're an extremely useful indicator. But the majority of the time, the underlying price will trade within the second deviation Bollinger Band. And it will put pressure on the Bollinger Bands if it really is looking for a run up or a run down. Other times, the Bollinger Bands might hold strong, like they did here, for example. The price puts pressure on it, the Bollinger Bands don't budge, and then we reverse back down. But ultimately, the fact that they're flattening out up here, they're not continuing to come down to meet the price, means that they're anticipating that possibility that the price could come back up towards 4450 range and still potentially be an overall chop, but that could end up being the top of the range. And so that's why they're kind of flattening out there to keep the price still within the comfort zone. But they're also saying, hey, at least as of right now, we're not flaring open. We're not anticipating a trend to move higher, but we could see the price come back up into this range and still stay within that comfort zone. So, what I would really want to see today into the close for that possibility is a continuation of a bounce to the upside today, maybe up towards 4,400. And ideally, a close above the 10 period simple. If we could start to get that, that might give us a better catalyst to then going up towards 4450. If we can't, if we just kind of stall here, then that's okay too, right? It just means that we might not get as strong of a bounce up. It could just be that it stays chopped basically in this 50-point range between 4400 and 4450, kind of around those levels there. Either way, though, that is what I'm anticipating right now. And it could be that we're in chop for a while. This year has had a lot of weeks where it just has stayed in consolidation, like back here. We could just not get going. And then we had a bit of a run up. So it could be another situation like that where we're going right back into chop and it may last longer than we're anticipating. Or it could be short lived when we bounce higher. So keep that in mind for those of you doing swing trades. You might want to build a bit more time into your trade. Or if you're looking at things shorter dated, you might want to consider, if you're not doing like quick overnight moves, you might want to consider more theta decay style trades, things that benefit from both consolidation and the possibility of a trend move. So that way you don't necessarily need the strong bounce in order to take those profits and allow theta decay to work in your favor. So things to keep in mind certainly, but the market right now doing a good job of holding up. That hourly chart is still looking pretty strong. So if we can get past this hurdle here of 43.80, 43.85, I do think there's that possibility to run into 4400 into the end of the day. So that's SPX. Let's go on with this list now. I know you guys have a few things that you're looking at here. First up is TTD. So on TTD here, we are seeing some signs of consolidation on our lower indicators, right? Similar to what we talked about on SPX, we have momentum attempting to reset towards that zero line. We have a consolidating signal here on the compound breakout tool. We have a squeeze that's starting to form. That's not surprising given the consolidation that we're experiencing. Um, on the top chart here, the trend is still overall bullish, very similar to SPX. It's basically recently been hugging that 10 period simple. So it's doing a good job of trying to maintain that bullish trend. It's not necessarily getting any strong selling to drop us back down. It's just hanging out. And so once again, that hanging out here can still allow the momentum to reset like it's looking for. The one thing I'm not necessarily a fan of right now for today is notice that the price has put pressure on the upper Bollinger Band with the high, but the Bollinger Bands are remaining flat, right? They were coming down towards the price and now they're starting to flatten out. So to me, this, you know, doesn't mean it can't shoot up higher tomorrow potentially and force the Bollinger Bands to flare open, but giving the bigger picture context here with all the indicators and what they're pointing to, it looks like we could still be in for some chops. So if you're looking at this and you're in it for a quick, short-term trade, you might be considering to lock in your profits here. Otherwise, if you're trying to look for this to try and fire to the upside, I would say once again, build some time into the trade if you're looking at something like a long call, right? Really give yourself the possibility to sit through the chop and still then be able to catch the trend move. And a great example of this is actually back here. Back here, we technically trended overall higher, but notice it was never a strong stair step move to the upside, kind of like this was, right? It was a very gradual move. You really were hanging out around the 10, got pullbacks into the 30 period simple. Really we're building energy into this squeeze here, and then you finally got it to fire and give you that more directional move to the upside until we're at where we are now, which is we're attempting to hold the psychological level of 75 as a price support, and we're getting back into that consolidation. So that's what I'd be mindful of in this case. Once again, a great example of here's the price putting pressure on the upper Bollinger Band, but the upper Bollinger Band isn't really budging. So for myself, there's probably not anything I would do on this today. If the Bollinger Bands were attempting to flare open, if we had a little bit more confirmation of bullish signals down here, then yeah, I'd be all for trying to play this squeeze for another fire to the upside. But the fact that this is still consolidation and the Bollinger Bands are flat would want me to at least pause and either say, okay, does it bounce up and I maybe miss the move a little bit and take action a bit later? Or can we pull back down towards the 75 level? And if we do, and that holds, well, then now I have room to play up into 80, and it makes a little bit more sense to use that as a buy-in opportunity or to put on something like a put credit spread, put unbalanced butterfly, just once again, like we talked about on SPX, and take advantage of the consolidation and the theta decay to allow for a profit rather than necessarily needing a strong directional move to have that follow through. And yeah, I see Netflix and I'll add that to the list. But up next is Tesla. So let's pull that one up. So on Tesla here, It fought the 200 level for a while. It was a level that it held the past couple of years as a price support. Then towards the end of last year, we broke that level. It turned into price resistance. We had this rally to the upside at the start of the year, attempted to break 200, but could never get very far. So that basically was still showing that that price level was really holding on pretty well. And then more recently on this run up, beautiful break and trend to the upside. We reached exhaustion levels, right? And so now we're pulling back. A lot of symbols are at exhaustion and pulling back after the run that we've had with the market. The good news about Tesla, for those of you still trying to maintain a more bullish aspect on this, is the pullback signal that printed the other day that's attempting to cancel out. So we'll have to wait until the close to confirm whether or not that's going to happen. But if it does happen, then that's a good sign. And there it flipped back off, right? So you still want to wait until the close. But if it can get that green box to print, it means the pullback that it was looking for has occurred, meaning we pulled back into the ATR trailing stop. That's the level of support it's looking to hold. And if it only prints the one box, then it's going back into a consolidating signal. If it starts to actually give us a bullish signal, which is either two or all three boxes and dots in a row, right? All three lines, then that could start to give us a bullish trend signal again. Now, from what we just saw, it looked like it was only trying to cancel out into a consolidating signal, which would make sense because there's still room for momentum to reset. Bollinger Bands are still kind of flat here. But the overall trend is bullish. We actually have some recent true lows here, which kind of spark my interest a little bit. The last time we had true lows, now these are cluster prints, if you will. But ultimately, if you bottom back here, or if you bottom back here once the Bollinger Bands flattened back out, both of those were really good places to buy in for this run to the upside. So you, of course, maybe want to give yourself some time on the trade, right? To still sit through that potential chop, but could be a good discount price before the next leg higher. Let's look at the weekly chart. So on the weekly chart here, it makes sense why the daily chart is pausing. It's because we're right at the 100 period simple on the weekly chart. So this is kind of the battle that it's fighting right now. You can see we had a low compression squeeze here that is attempted to fire to the upside. Bullish signal on the compound breakout tool. Bullish momentum that still has a bit of room to move to the upside. Uh, but as a reminder, when you've been trending below the 100 period simple, like this has been doing on the weekly chart since the end of last year, you always need to be cautious whenever the price finally gets a chance to come back up and test the 100. Because sometimes, unfortunately, what can happen is it's short lived, right? It's almost a fake out move for bulls, and we end up stalling or we drop back below it. And it ends up being a bit more of a reversal signal back to the downside. So, what I would want to see here on Tesla right now is one, it really maintain holding the 100 as support, which so far for the week, it opened at that range, dropped a little bit below it, but currently it's holding up well. We're making a bullish divergent bar. And ideally, if we really want this to go back into a strong trending kind of bullish sentiment, we really want to see it continue to stair step up from here. Now, I don't know if that's going to happen because of the exhaustion levels that we're at on the daily chart. It could pause a bit more before that occurs. We do have back to back divergent bars. That can also be a sign of consolidation. So we're seeing that on the weekly chart. Our moving averages are technically in consolidation. The 10 is in between the 130. But I do like how the Bollinger Bands are pointed up. I like the overall bullish sentiment down here. So really watch, I would say, the 250 level. And if it can maintain really holding 250, then that's a good sign that we could just be taking a little bit of a breather from this run and setting up for the next leg higher. If we start to drop and more importantly, close the bar below 250, then you need to be very cautious about a pullback into the 10 period simple that's at 210, maybe the 200 price level. And if that holds, then we're starting to go into a wedge pattern. If that breaks, then it looks like there's a better probability for a rollover that you'd want to be mindful of. Now, I wouldn't necessarily anticipate that on Tesla because it's doing a really good job of holding up, but you never say never in the market, right? So that those are the levels I'd be watching and playing into. Otherwise, if it can hold 250, then next big target to the upside, at least in my perspective, would be back up towards 300. 300 was also a price level last year. Acted a bit as resistance there when we ultimately rolled over and sold off. So that would be a good place to go back up and test. And once again, see if we can't break above it to go into a stronger bullish trend move. So I don't think it looks bad in regards to shorter directional trades. Once again, credit spread trades, unbalanced butterflies, things that can benefit from chop might be a little bit easier to sit through on chop. If you wanted to try and play the true low signal or that bullish divergent bar, if it does print into the end of the week and remains valid, that then I would just say just give yourself some time on the trade idea, right? If it's more directional, like a long call. And then Anne mentions there is a gap at 235 on Tesla. Thought we would hit it before moving higher, but went up yesterday. Frustrating. Yeah, so you bring up a really valid point, Anne, and I'm glad you did. And I do see you and Google, guys. I'll add that to the list. Should be able to get to it today. But on gaps, and let's go back and talk about that. These alerts down here, right? This is actually a really good example. These are all gaps that we have made on Tesla for a gap higher. For example, this one here, this was a gap up. And so there are a few things to be very mindful about with gaps. The first thing is one, they don't always fill, right? It's easy for people to see a gap and to instantly be, oh, I can take a trade for that gap to fill, but sometimes they don't. Um, the other thing to be mindful about is the ones that don't sometimes fill, right? That most of the time they have a good probability of filling the gap moves. The ones that don't, I have found have oftentimes been the ones where they are gaps to the upside. Because overall, for the majority of symbols at least, and certainly for the market itself, it's a bullish beast, right? If we pull up a monthly view on Tesla, we will see that the overall trend move is normally bullish. And so what that means is if we ever have, right, overall bullish move. Tesla might not be the best example, but because it really took off and then pulled back last year. But it's certainly with the market, right? You can go back in time and you just look and it's like, oh yeah, that's clearly a more bullish sentiment to have. And so because of that, it's the ones where there are gaps to the upside that have the, harder probability, if you will, of following through compared to gaps that happen to the downside. The second thing to point out is sometimes the gaps don't fill right away, right? Sometimes it can take years to fill a gap. I used to trade, and the reason why I bring all this up, guys, is because I used to trade gaps very, very early on in my trading career. I used to try and play the gap fills, and I used to look at them as quicker swing trades, if you will, something that would happen within the next couple days or within the next week. And so it wasn't necessarily a bad strategy. It was working out overall pretty well at the time. But there was this one gap in particular that happened on SPX that was a gap to the upside that I took a trade on. I lost, the gap didn't fill. And so I was like, okay, I'm going to keep track of this gap and I'm going to see how long it takes to fill. And it literally took over a year to get that gap to finally have the market pull back down, fill the gap, and then it bounced. And so what I do, that was a really good learning lesson for me. And so what I do now is I'll keep track of gaps, right? Sometimes I'll put up alerts like you can see here on Tesla to keep track of them, but I won't necessarily take a trade off of them. And what I do is when I keep track of a gap, like here, for example, I was keeping track of this gap. And so if I see the price starting to reverse where it looks like it's on its way, sometimes I'll keep track of it in the sense of the gap could be like a magnet and it drives the price up into that range. And then once it fills, sometimes it immediately reverses back the opposite way, or sometimes, like in this case, it will keep going. So I totally get why you might have been looking for that follow through to the downside. The thing that would have had me hesitant about this gap filling personally is the fact that the ATR trailing stop was right above it as support. So it didn't want to break the ATR, got close to the gap, but didn't quite trigger it right. And now we're bouncing back to the upside. Now, maybe in a couple weeks, yeah, we could find ourselves back down near that 235 level to fill it. But I wouldn't necessarily try and take full trades, ideas solely off of a gap. Let the other indicators kind of help you out and point you in that right direction. And then, of course, maybe have that as a level to be mindful of, but not necessarily trading just solely off that one bit of analysis. And I hope that makes sense. Um, and Christian, it's just one of those things that the gaps do oftentimes get a fill. The market just I don't know, you could argue it's like an OCD thing, right? That doesn't like seeing these big gaps. So eventually the price will come back and fill the range of where that gap is, kind of test the high, either the high that it had prior, the low that it had prior to the gap down, or the high that it had prior to the gap up, and kind of just fill that range that happens in between. But they don't always fill, right? And that's the thing I would take away from this personally, is in particular, like I said, it's the gaps to the upside that you need to be a little bit, I would say, more cautious about in general. So I hope that helps out. Let's keep going here for INTC next. Rafting. So for the Moo platform, for those of you who don't know, I will be, and Lorna just posted this in the alert section above, but I will be in here tomorrow right after market close at 3:15 to go over the Moo trading platform. For those of you who don't know of it, it's a trading platform that you can use to execute your trades. And I've been playing around with it on the paper side. I've been looking at it, and it's one that I really like. So I've put some money into it, and I plan to actually start next month's July's $500 challenge in that account to kind of highlight it and show its use. They do, I would say, have competitive price levels, and I'll talk about that a bit more tomorrow on the option side. And I do think overall it's pretty easy to use. Maybe not as simple as Tasty. I think Tasty is probably the simplest kind of execution out there in regards of trading platforms. But what I like all the features Moo has. It has a lot of features, and in particular, I really do like the mobile app. I think out of all the trading platforms that I currently use, Moomo's probably my favorite from an app standpoint, just because it has a lot of features and a lot of ways you can kind of keep track of things, which I think are really interesting. So I will certainly talk about that more tomorrow in more detail, and happy to do that. Uh, and Grace, we are in talks of doing that. So I have been talking with Moo. So I'm hoping that we can start getting some of our indicators onto their platforms. They're not available yet, though. So I'm currently using it more just as a trading platform itself. So kind of like Tasty, right? Tasty has finally gotten some of our indicators over, but I use that more from an execution standpoint. But I'm hoping we can get our indicators over there so that way it can also be a chart backup to Thinkorswim as well. Of course. And I'll certainly keep you guys posted. So it seems like they're open to the idea, but obviously that takes a bit of time to do so. And we did, with me talking with Moo, there is a special link and deal, which I'll share with y'all tomorrow, where if you sign up through Simpler, you get a few extra bonuses versus just going the regular route through the website. So I'll talk about that more tomorrow, though. Let's keep going through the symbols, though, for today. So first up on INTC, overall bullish trend. Similar situation, though. You can see it reached a level of exhaustion, the top of the axis, just like it did back here. Now, this one certainly had a bit stronger of a pullback compared to the market, right? It certainly got a drop to the downside, went right into the ATR trailing stop, held that as support. Recently, we've had back-to-back divergent bars. Now, technically, all of these, except for the current bullish divergent bar that printed yesterday, all of these have followed through with higher highs or lower lows. But you can see that back-to-back divergent bars can signal overall chop. And rafting, yes, it will absolutely be recorded, as always. Yeah, Aaron, it took a while to convince Tom to get our indicators over onto their charting platform. I would agree. He's not a fan of the technical analysis, so that's why it took us a while to convince him to be like, "Hey, you might not be a fan, but there are other people." So I'm hoping Mumu won't take as long. Uh, but I'll definitely keep you guys posted on that. But back to INTC. So back to back divergent bars can be a sign of chop. The bullish divergent bar that printed yesterday is still technically a valid signal. So within the next 3 trading days, including today, ideally, right? That's the 3 bar rule I give it. We are looking for move back to or above 34.23. But you can see momentum's still resetting. This is still choppy. So even if we do get the follow through, I would still be a bit cautious of how strong of a follow through it's going to be, given the current chop and given, of course, that the high of yesterday basically tagged the 10 period simple and is we're still holding that as a resistance level. I do like that the trend is still overall bullish. It's obviously nice to get the reset that we're seeing here. But like I said, this is kind of the common theme across a lot of symbols, which is why I'm looking and I've been starting to scan and slowly entering a couple trades here and there, but I've been a bit light because I've been waiting for this kind of, if you will, short-term pullback or consolidation to happen so that momentum can reset and give us some better entries. So we could be starting to build into those quote unquote better entries, but I don't technically have anything from the buy side yet, right? I don't have green momentum bars. This isn't canceling out or giving me a bullish signal. So I don't necessarily have a strong trigger to say this is the entry to jump into just yet. So it goes back to the narrative of give yourself some time on the trade or lean towards theta decay style trades to really benefit from the chop overall. And so here on INTC on the weekly chart, part of the reason we could have pulled back is we got close and quite tagged the 100, but we did get close to it. Similar situation to what we talked about earlier with Tesla. This has definitely been trending below the 100 period simple. So right now, what it appears like is happening is we're probably going to start going into a wedge pattern, right? Where the 10 and the 30 on the weekly chart are attempting to hold support, but the 100 period simple could give us some trouble as resistance. And so what happens usually when this occurs is we trade in between the two levels, the moving averages get closer together. It basically kind of pinches the underlying price, and then the underlying price will eventually break out of the wedge and it will either play to the upside, breaking the 100 period simple and maybe continuing higher, or it respects the 100 as resistance and rolls back down off of that level. Here, for example, you can see we were attempting to hold the moving averages. We were attempting to break the 100, but that ultimately failed. And then we broke and trended lower. And so that's what I'd be cautious about with INTC. If you are playing that from the daily chart perspective of bullish, just be very mindful of this 100 period simple, which is currently at 39.16, but it's trending lower. So keep that in mind if you're playing it longer term. Just be aware of this overhead level to the upside. If we keep getting close to it and stalling, right? If we can't really break above it, look to take the quick win. Worst case is we then start to break above it after the win and you just look for a re-entry back to the upside. But you'll be much happier protecting your capital if instead it rolls back down and basically takes away the profit that you might have. I do like the lower indicators. Momentum's bullish with room to move higher. This is becoming a bullish signal, so that's a good sign that if it remains valid, we will go up towards the 100 and test it. We still have a squeeze setting up here. But at this time, it really looks like it could kind of just stay within this wedge pattern at the moment. So that's what I'd be mindful of from a daily perspective. Let's go to Uber. And Grace, yeah. I don't know if the true low indicator is technically up on Tasty yet, but they do have the compound breakout signal and they do have the divergent bar indicator. So I can show that really quickly. There's the compound breakout tool, for example, and then let me zoom in so you can see the bars a bit more cleanly, but then there's the divergent bar indicator. It's not the same colors as what I've set them as for Thinkorswim, because obviously on Thinkorswim you have a little bit more flexibility on how you can change the colors and stuff like that. But that, for example, was a bullish divergent bar. That was a bearish divergent bar. And so they do have those available. If you already have the indicators set up for like for Thinkorswim or one of the other platforms and you have a Tastyworks account, just let us know and we'll make sure that you can get those indicators added. You don't have to like repurchase them or anything to have them available for your Tasty Trade account. Of course. For Uber here, great run to the upside. This actually still has room on momentum compared to some of the other symbols that we saw. Not quite the strong bullish signal on the compound breakout tool like I typically want to see, but you can't argue with the trend itself, right? The 10 period simple has done an excellent job of maintaining support. The overall trend is bullish. Bollinger Bands are still pointed up. We're actually making another bullish divergent bar here. I'm not a fan of how much this has already bounced up, right? If I caught this earlier in the day down here, 45 would have probably been my target to the upside, if not higher. And we're already at 45 basically. But you can see the last few times that we've printed bullish divergent bars off this level, it's been a good place to buy in for the next few bars for that leg higher. Let's take a look at the weekly. Make sure we're not about to run into weekly resistance or anything. So we're not. Weekly chart still has room on momentum, as you can see down here before I zoom in. So that still has room. We have the bullish signal on the compound breakout tool. We actually had a nice true low entry back here. So that would have been a clean spot to jump in at. Bollinger Bands are definitely flaring open. It's not anywhere near weekly support. So, in terms of a bigger swing trade kind of perspective, ideally, I would have liked a pullback or consolidation, kind of like what we had here into that level before playing the next leg higher. Um, but as long as daily support's maintaining, right, arguably that's still a valid entry. Let's look at the 4-hour chart. So Uber on the 4-hour chart, bullish divergent bar there as well off of the 10. So not bad. You have both that and the daily chart kind of in agreement right now. There's room on momentum. That's what I wanted to see is if we were at 4-hour exhaustion. We're not. So, I mean, if you're in this, I would say stay the course, especially if it closes with a bullish divergent bar today. The only hesitation is if it keeps stalling at 45, right? That might start to become a price level. But it's only been hitting that level the last couple of days. So I wouldn't say it's like a strong price support or price resistance like we, have seen certainly in the past. Um, so yeah, I don't know if I'd want to take a trade here personally. Like I said, I would have preferred if I was watching this jumping in closer at the open to get that follow through. But if you were to do something for like an overnight move, you might consider just jumping into a long call next week, maybe depending on your capital risk tolerance, maybe something like at 43. Um, the delta on that is a zero point 0.8 delta, so just slightly above the zero point 0.7 delta. The reason why I say 43, though, from a strike perspective, is 43.24 is the 10. As long as we can maintain that, your strike will stay somewhat in the money. So it's still, no matter what, should hold some value. And of course, if we do kind of stair step higher with a zero point 0.8 delta, that should allow for a nice increase in quick profit, even if the underlying price move isn't, a dramatic move to the upside, if you will. And of course, by going out to next week, that allows you to hold for the 3-bar rule, looking for that higher high to the upside. Because you would want to hold it at least until Monday. So for Thursday, Friday, and then Monday to get that follow through. But that is Uber Netflix is up next. Let me pull that one up. Oh, sorry guys. I keep accidentally doing that. I'll accidentally click on the chat and then let me delete that. I put in the symbol over there. There we go. Of course, Lynn, not a problem. And JK, absolutely. If you have an indicator on let me pull this up. Microsoft getting a nice bounce. If you want to take the quick win there for those of you following along with the $500 challenge, you can. I'm waiting for a little bit higher of a move. Hopefully the market, which is breaking, right? That's what we were looking for. So it is starting to break. Bollinger Bands are starting to open. Bullish signals across the board now on our lower indicators. That all looks good. If the market can keep going to the upside, I think it will take Microsoft with it and allow us a bit bigger of a profit, but do want to point that out there. But JK, back to what you're asking, absolutely. If you have any of our indicators over on Thinkorswim, you can use those to scan. Now, I probably am not the best person to ask how to set up the scan because I've had Eric or Duncan in the past set up the scans for me and then just share with me the link. But here's, for example, here I am scanning for divergent bars, for bullish divergent bars in particular. And so if I did that for today, you can see BABA, PayPal, Gold, Starbucks, all of these are currently making bullish divergent bars to where I could then quickly go through the charts and see if there's one where I actually like the setup and want to take. Personally, I don't take divergent bar trades until, from a daily chart perspective, at least until closer into the close, so I can confirm the bar is going to remain valid, right? The signal. Um, but yeah, if you wanted to scan for the squeeze, you could do something very similar where you just scan for the squeeze, either do your own watch list or, of course, you can scan it through any of these, like, if you wanted to scan for, um, by industry, you could do that. You could scan for upcoming earnings, you could scan for the top 10, you could scan just in the Nasdaq 100, right? There's a lot of different ways and categories to scan through. And yeah, you can configure the time frame. So, you can do daily, right? You can do all these different time frames. There's also rules, like, for example, on my true low scan that I have set up, I scan for the true low specifically for the cherry on top, which is that pink triangle that you see on the indicator, and then I do the scan within 5 bars because usually, unless the move happens, like, immediately, you can usually, still jump in after the signal prints a little bit to play the bigger swing move. So if I were to do that, for example, then I definitely have a lot that popped up on my list that I can work through. So there's a lot with the scan feature on Thinkorswim you can look at. I would say next time, I don't know when Eric jumps on the mic, but next time he's on the mic, he'd be one of the best people to ask about that because he does all the coding for our indicators, or at least he did it for all of my indicators. And he knows how to really work the scanner if you're like looking for specific like things to use it for. Yeah, of course, and you can also email him too. I know Eric's pretty good about his emails and getting back to people. So let's go back over here to Netflix now. Netflix, ah, great example of a bullish divergent bar follow through. Excellent, excellent follow through. Did have some back-to-back divergent bars recently, so you might have been a little cautious about that from the chop. Maybe you stuck with a credit spread or something. But if you did that or the directional trade, excellent follow through with the higher high today. You're actually starting to get a bullish signal to attempt to print on the compound breakout tool, so that's looking good. Bollinger Bands look like they're attempting to open up a bit higher now. I would still be a little cautious myself around these recent highs between 440 and 450 range, right? If you see the price get up into that level and start to stall, could still be in chop because momentum is right now still in the process of pulling back. We don't have a green bar yet, necessarily saying that it's starting to reverse back into a bullish trend again. But I do like some of the bullish aspects that we're seeing here. And certainly, if tomorrow we can continue to stair step up, if these Bollinger Bands continue to open higher, we could be starting to go into the next leg to the upside. Let's take a look at the weekly. And of course, JK. So on the weekly chart, the caution I would have about this is momentum is technically getting close to the top of the axis. It might have another week or two, but it is getting closer. Now, one thing that could keep this propelled to the upside is we do have earnings later next month. So we might actually be starting to get a run into earnings, which, would certainly be nice if you're in a bull swing trade. The other thing I do like about this is it broke above the 100, so it's similar situation to what we've talked about today. It was in a bearish trend, went up, tested the 100, was kind of in a slight wedge pattern here, broke it, but then it really stair-stepped higher, and that's the kind of thing that you wanna see when you break above the 100 is you wanna see that strength of the move continue to follow through. You don't usually wanna see it stall, and you certainly don't wanna see it break back below that level. So that's the good news is we had a decent stair step up, a little bit of stalling here, which, makes sense. We weren't inside the comfort zone of the Bollinger Bands, so now we're back inside the Bollinger Bands. Bollinger Bands are still pointed up, so they're still anticipating a continuation higher and are trying to make room for it. But then we also have a bullish divergent bar for the week. So if that prints into Friday, then that once again could be a good sign that we, one, follow through short term with the higher high, but two, very similar to here, could get a run up into the earnings announcement. Now, obviously, Netflix is a bit more expensive compared to some of the other symbols that we've talked about here. But if you like that possibility of it trending higher into earnings, what I would look to do is go out to the expiration that's right after earnings with the idea that you don't necessarily plan to hold through the announcement, but you're looking to participate in that trend to move higher. And if you do have a larger account to where it's within your risk tolerance, of course, you could just look to jump into a long call. If you're like me and it's like, oh, that's a little outside my risk, then you could look to do something like a vertical spread, right? And play it to the upside, still keep it a bit more directional, with the idea that we trend higher. Now, the benefit, especially if you do something like a long call, the benefit of going out this far past the earnings announcement is theta decay should not work as dramatically against you as it would if you were prior to earnings, because of the uncertainty of the move around the announcement, right? It could be a non-event or it could be a huge gap move. So the market makers like to keep the premium kind of tucked into those options a little bit more. It's not even uncommon to see premium actually get built in and those options become more expensive going into the news. And so in turn, right, doing a long call or if you do like a wider vertical spread can help benefit you some from that theta decay if we chop a little first, but ultimately do still get that directional move to the upside. Um, so I don't think that would necessarily look like a bad trade idea there. But I do like how that's holding up pretty well. I think the next one is you that was asked about. And Rich, you should be able to see my screen. Let me know if you can't. And then yeah, absolutely. Lila, I do also have a video. So for those of you who are new, wondering about some of these indicators, I know I've posted this in here before, but I also know that some of you guys aren't in here from past sessions or you're newer. Um, there is a spreadsheet that lives out there currently. I know we're reworking some of our stuff in the learning centers and foundations, but this, as of right now, last I checked, is still a very useful spreadsheet to have. So let me post this in the alert section really quickly. And I'll pull it up here so you guys can see it. Uh, but this has a lot of educational videos around it that me and some of the other traders here at Simpler have done. In particular, a lot of the ones I did, which you'll find in column B in that first column, I go over strategies, I go over what's on my charts and why, but I also go over indicators a little bit later down here. And so, for example, here is an intro to the compound breakout tool. So please feel free to check that out. I'll also post it over here to YouTube and Twitch for you guys. So you guys have access to it as well. But as long as you're signed into the Simpler website, which keep in mind, all of these are access to the free room. So as of right now, you don't necessarily need a membership to sign up for the Simpler free room. And in turn, you'll have access to these educational videos. And certainly, if I get a chance, I'll talk about it a bit more here. But check out the intro to the compound breakout tool because I spent about 30 minutes going over that indicator and why I like to use it, what the components are that make it. And so it's a great place for educational videos. I know Neil did a bunch of beginner future videos too and things like that. So it's a good place to kind of get some of those specific topics. And for a lot of the ones I did around strategies, I also made like PowerPoint, like Google Slides around them so that it is pretty, educational for you guys. It's not just me talking like I am now necessarily. And Rich, you just have to be logged into the site, so you should have access to it. You don't have to be like an options member, for example, to get access to those videos. So for Unity here, very nice bounce to the upside. You actually had a recent true low print right before that run up. So that's, sometimes the true low indicator, it will print and you'll have time to enter the trade before the run. Other times when it prints, it can get that immediate follow through like you see here. So great, discount buy for anyone who caught that. You had the valid bullish divergent bar that might have helped solidify you wanting to jump in there. But immediate follow through, gap move up, held the 10 period simple. Today we're stair stepping higher. You're getting the bullish signal now confirming on the compound breakout tool. You're getting the green bar on momentum with room to move up. Bollinger Bands are opening to the upside. So overall, I like everything about this. The one thing that I would be cautious about, to where if you had multiple contracts and you jumped in back here, you're debating about taking profits, I wouldn't hesitate to at least take some of those profits off the table. And the reason why is the 45 level. We haven't quite broken above the prior highs. Now, currently, everything looks solid for that to happen, right? Across the board on our indicators. But I've seen it one too many times, specifically this year, but in general across my trading, but specifically this year, um, where we'll bounce up. Everything looks solid for it to continue across the other indicators, but then price resistance or price support wins over everything else. So because we haven't really broken and closed above that level yet, if I personally were like in two contracts of a trade down here and played it up, I would be taking at least one off the table and locking in that profit personally. Right. I've seen it happen too many times, especially this year with kind of the choppiness that we've had a lot over on the markets, where everything looks good, but then price resistance wins and you find yourself right back into chop. Otherwise, though, if we can break and close above 45, that trend move still has room to go given where momentum's at currently. So it doesn't look bad. Not my place for an entry personally, but a solid move overall. And then for Google here, and then Aaron, I see SHAK. I'll add that to the list really quickly. So for Google, this is another one I've been keeping an eye on. It had a little bit more of a pullback than I wanted to see, but so far it's holding the ATR trailing stop as support, which is good. You've actually had some recent true low signals print. What I really want to confirm is the Bollinger Bands continue to flatten out. The upper Bollinger Bands are flat, but the lower one is still kind of pointed down. Now, that could just be to try and encompass this move down to test the support, and then they'll flatten back out between today and tomorrow if we hold and start to bounce. But of course, if we start to break this level, we won't necessarily want to be in a bullish trade. And the caution I have around this is momentum is, even with the bounce today, the follow through of this bullish divergent bar and the higher high, it's seeing the momentum cross below the zero line, which usually is a bit more of a bearish signal when that happens. Now, every now and then, momentum will do like a short-lived move where it barely crosses below the zero line and then picks back up and, kind of slingshots back to the upside. But this is why you need to be cautious, right? Is when it crosses below, if it keeps going. And if that happens, that could be a catalyst for us breaking support and maybe a stronger pullback towards the 100 or something like that. That's not what I'm anticipating at this point. Like I said, it's doing a good job of holding up. This is still more a consolidating signal. But that would be my slight caution around Google at this point. So strategy wise, I would once again maybe lean more towards credit spreads on balanced butterflies. If you play it directionally, I would look short term for the moving averages to be a target, followed by the price resistance up here around 125 at that psychological level. And then, of course, if it starts to bounce back up into that range and our indicators down here are turning a bit more bullish, if our Bollinger Bands are starting to open up, then it looks good for maybe that stronger swing move to the upside. But as I've talked about, a lot of these symbols on the weekly charts have been hitting exhaustion levels. And I'm pretty sure Google is one of them, to where you might want to be mindful of either further chop or that possibility of a break. So, yeah, Google right at the top of the axis. It's our second week of a red bar. So that's a good sign that we're starting to hit exhaustion. We just broke above the 100 period simple. Notice that it's doing a good job of holding the 100, which is good for bulls, but it's not getting a strong follow through, right? It's not getting that immediately stair step up like we were seeing on Netflix, for example. And so that always makes me a little cautious when you've been trending below the 100. Last week has a valid bullish divergent bar. This week is attempting to print one as well. Once again, back to back divergent bars can be a sign of chop. I would also maybe be a little bit mindful of these because they're also at exhaustion levels, but you could ultimately look to maybe play back up into the 124.57, 125 range within the next couple weeks and maybe put a trade idea up around that level there. Otherwise, though, I'd probably want to confirm that this maintains support into the end of the week and then lean towards, once again, like a credit spread or something to benefit from both chop and a directional bounce and follow through to the upside. Not a fan of the weekly exhaustion there by any means. I'm Rich, good, glad to have the issue fixed. Good to see you here. And then, and you're looking at seasonality on Google. It's been bullish in July. It certainly could be. Um, One thing I'll point out, though, right? Just take so I'm not saying that this won't be the case for Google this time and it won't be bullish, but I would take some of those things for a grain of salt. And the reason why is because sometimes um I feel like a lot of those rules, quote unquote, like if if the dollar's acting this way, then the market's doing this. Or if the market's doing this, then bonds are doing this, right? Or there's the old saying, sell in May and go away. And I feel like those rules that people in the past have traded by, right? The last several years, even like before COVID, I feel like those rules haven't been hitting as well as they used to, meaning that it hasn't seen the same kind of follow through and structure. Like gold is a good place to go for inflation necessarily. And a great example of that is recently. So sell in May and go away. Well, if you look at the month of May for Google, at least, that wasn't a sell in May and go away. That was a nice bullish run. You would have missed out to the upside off that move. So I'm not saying that July can't be another bullish month for Google if it is seasonality, but I would still, you know, keep it out there as maybe a place to be mindful of, right? As an analysis to be aware of, but still watch your technicals. If we're starting to break, you don't want to just live solely off the idea that usually Google's bullish in July, therefore I need to be bullish. If everything's breaking and turning back down, you won't want to be long in that case, right? So just things to be aware of. And then last but not least, let me pull up SHAK. Will probably be the last symbol I'll get a chance to look at here. Oh, in the market, notice what happened. Went right up towards 43.90. Know how I mentioned that sometimes we'll get up close to 4,400, but won't quite tag it. And it had a pretty big drop here, but it's dropping down to 43.80. The good news for bulls is that's what I pointed out as a potential price resistance. So right now, it's testing it to see if it can hold its price support. And if it can, could allow for a second bounce to the upside. If we start to break below it, then might need to be mindful of that chop a bit more. SHAK, so this overall bullish trend, there is still room for momentum to the upside. You're doing a good job of holding the 10-period simple. Bollinger Bands are pointed up. Um, obviously back here or even at the low of today would have been a better place to try and jump into this. I'm not necessarily a fan of jumping in near the upper Bollinger Band, but if you're looking at this for a bigger swing move, doesn't look bad. You are right around 75 as a psychological level. On the weekly chart, we still have plenty of room on momentum to continue higher. Nice break above the hundreds. Like I said, that's typically what you want to see. The 30 still hasn't crossed above the 100 yet to form a bullish trend, but we are getting closer to that. Bollinger Bands are opening to the upside. So, I mean, overall, I don't think this looks bad. It's just probably not my favorite place to necessarily jump into something here. If I did jump into something, I'd probably do a slightly smaller capital risk than what my normal risk tolerance is. And then I would also give myself plenty of time. So that way, if it's more of a gradual run to the upside, or if I have to sit through another pullback into the 10 again, I'm able to do so and still be able to play the trend move. But it certainly looks pretty solid right now. And that is my time, guys. So thank you so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to y'all next time. Bye, guys.